Afternoon, everyone, and welcome to the Women in Innovation Building Success webinar. Today we're going to be talking about pitching to investors, and I'm going to hand over to my colleagues Charlotte and Emma, who will run you through today. Thank you all for joining. Just to let you know, you are all on mute for the duration of the webinar. If you do have any questions, please type them into the Q&A box, and we'll be asking them at the end of the webinar. So over to you, Charlotte.
Hello, I'm Charlotte Thompson in the Access to Funding and Finance team at the Knowledge Transfer Network. And in our role, we support companies on a one-to-one basis and through our programs to help understand the innovation funding landscape, determine the right funding for you, and then help present the best of yourself to approach whether that's investment, grants, or debt. So today we're going to be looking at what an investor looks for, and so that you can get yourselves into the shoes of an investor. And then we'll be going through how to prepare a compelling investment pitch to approach that investor that's right for you. Emma, would you like to introduce yourself?
Hi, I'm Emma Fadlon and I work with Charlotte. I have a very similar role with Charlotte, where I work with companies to get them funding and finance and investment ready. My experience is really up to Series A funding, and I do a lot of work with business angels and early stage VCs. Okay, so the first set of slides that we're going to take you through is to get you to think about investment from the investor's perspective. It's very easy when you're starting off looking for funding to sort of think about what is it that I need and why do I need this for my business, but you quite often forget that what you're doing is you're actually selling part of your business, and you are selling it to an investor who has very different reasons for needing to invest. So what we want you to think about now is to, when you think about your investment and your investment pitch, is not to think about what is it that I want, but what does the investor need and what is the investor looking for? And it's really important because quite a lot of investors are people who are investing their own personal wealth, or they're managing pension funds, or they've got portfolios with very, very specific needs and requirements. So the first thing you need to think about is, if you are going to put your own money into a business, what would you want to consider? What would be important criteria for you? And in an early stage investment, one of the first things is a great team. Now, why is a great team important? Well, I'm entrusting you as a team with my money, or my pension fund money, or somebody else's sort of personal wealth, and I'm expecting you to manage that well and deliver investment into when I'm going to see a return on my investment. It could be 5 years, 10 years, 15 years, 20 years, depending on the sector that you're in. So I have to really think that the team who is on this is going to be reliable. I'm going to get on with them, and I can have a good relationship with them. The second thing, I want to be sure that I've got a really good product, that there is a market for my product, and that the team who are driving this have really understood the customer's needs and issues. So it's around having a very, very clear and strong value proposition around that product as well. The third thing is around the intellectual property and intellectual property rights. Now, that might not be relevant for all of you, but is certainly something that you need to consider, if nothing else, around branding, your company name, and your website as well. I have had quite a few people who've come up with company names where, if you go into sort of branding or looked at company's house, there's very similar names, or if you look at the URLs for websites, they can't actually own that. And it's very unfortunate if you have to start changing your branding at some point in time. So don't just think about branding around it is an intangible asset, is part of your intellectual property, as is copyright. And copyright starts being really important when you are getting maybe people to do CADs and designs for you, because unless you have the right contracts, you won't own that intellectual property either. So intellectual property is not just patenting, it's design registrations, trademarks, and copyright. And make sure you really understand that and you've got that covered. The fourth thing is they're going looking for is a really good market opportunity. So you've identified customers with a compelling need and issue, and you've developed a product that's got the features and provides those benefits. But is this really a compelling market opportunity? Is there a large enough market to actually give you the growth and the revenues that you are projecting? Which areas or which countries do you need to go into? Are there verticals that you need to go into within any particular market segment? And how are you going to actually reach them? Those are all things that you need to sort of think about and consider. So you've got to show that you've got a really good opportunity there and that your numbers stack up. And that's where you come onto the business plan, because the business plan, which is how you're going to develop your product, how you're going to reach your customers and sell to them, how you're going to support that product, and how much it's going to cost, and the team you're going to have, that's all part of your business plan. And it needs to be really well aligned to your finance and your financial projections. And I have seen projects where the amount of investment people are looking for versus the length of time till profit in the business have not really stacked up. And so the investors know you need more funding or you need more investment. Not a problem that it takes a long time to do that, but make sure your business plan and your financial plan are aligned. Then you have a credible valuation. Now, what's important about the valuation is it's got to be fair for you. You've got to have enough value in the company that it's motivates you and inspires you to keep working for it. But it's also got to reflect the risk and the stage that you're at in the business and how much investment you need. So do consider that when you're working through and you're working a valuation, and use the appropriate method to calculate your valuation for the type of company you are and where you are in your growth cycle and what traction you have. The last thing, go back one slide, please. The last one, of course, is profit, which we talked about. So you've got, at some point, you've got to make money. So next slide. So the other thing to think about with an investor is the portfolio approach. An investor is investing not just in one investment, and some investors, particularly VCs, have a finite pot. So they could have a VC, for example, could have a fund that they have to spend within a 10-year period, and they want a particular return on their investment because it's going to go into a pension fund for a corporate. Or you could have a business angel who is looking at making investments in a financial year because they're doing that because they're having fun, they like investing, but also they're getting personal wealth management and they're getting the tax relief. But the general idea you need to think about with a portfolio is that an investor, typically a VC, would be looking for something like a 25% on average year-on-year return on the investment. It's likely a couple of them will break even, 2 more will make a 3 to 5 time return on investment, which means that at least one of those investments needs to make a 300 plus return on their investment. So you need to understand what sort of portfolio an investor invests in, where they are in that funding cycle in that portfolio. If they are not an evergreen investment fund, if they're an angel, it's about what sort of success they've had, what risk profile they're willing to take in their portfolio, and understand what sort of investments they've made. Because if they've already made an investment in your type of technology, if it's underperforming or the market's not really growing in the same way as it's been anticipated, are they likely to want to make another investment in your particular sector or technology solution? So do think about the portfolio, ask the investors, have a look at their websites, have a look at the databases where you can see what sort of investments they've made, and have a look at the market trends as well. UK VCs tend to follow American VCs. So whatever's fashionable in the US is likely to be fashionable in the UK. And coming to year end, if they're managing funds which have got tax relief on them, you may find that they're more likely to want to make a quick investment than if you're starting off at the beginning of April or May time when it's the beginning of the tax year. So do take that into account as well. Next. So it is a competition. And why do we say it's a competition? That's because there are all these other fantastic companies out there who are looking for investment. And you need to think of your relationship with the investors, that you're a team, and that you've also got to differentiate yourself from other people who they might be looking at and might be reviewed by the investment committee. Next slide. So where do you put all of your effort when you're going out there meeting investors? Well, you've got three ways in which you're going to interact with investors. There's going to be one-to-one meetings, public networking events and showcase events. And that's typically where you might have sort of short pitch opportunity, whether it's a formal one or on a stand. You'll have invitations to formal investment pitches, and you could be asked to give a 5, 10 or 15-minute pitch. And that could be in front of a curated specialist group of investors, or could be in front of a generalist group. So you need to be aware of the audience. And it's only if you've gone past those two stages that somebody's going to bother to spend a lot of time looking and reading your business plan. And that is the third form of pitching that you'll do. Now, how much effort should you put into all of those? Really, you've got to consider and look at the world from the point of investor and how many pitches that they may be reviewing in any sort of any financial year or 12-month period. Next slide. Typically, and we've got this validated, a VC will probably have look at about 1,000 introductions per annum, and those will typically be one-page decks or a slide deck, and they will be reviewing those, plus they'll be going out to other events. So on the basis that you have to make the biggest impact with the shortest period of time, do think about how good your elevator pitch is, your 30-second pitches, and how good your one-page investment summary is. Can we go back one, please? The formal pitches, you're typically talking around about 50 people. 50 people will be taken forward, and some angels will only meet, say, 4 times a year and only bring 4 companies forward, including those who want to be invested in. So as we said, it's a competition. You've got to really stand out from the crowd. And of those, maybe only 10 will be taken forward to due diligence. So think about the quality of the presentations that you have and how you are prepared when you make these introductions. Next. So as we've said, think about the events you're going to, what opportunity you have in your networking to make a good impression, get to know who's going to be in the room for those longer pitches and how long you've got. And then when you come to the due diligence point of things, make sure you've got all that paperwork there and ready, because at that point, they've actually spent a lot of time engaging with you and getting to know you. And that's where you need to have maybe not so much the business plan, but all of your legal paperwork, your term sheets all sort of ready to go. Okay, over to you, Charlotte.
Great, thanks, Emma. So like Emma was saying, how can you be going through what you need to include? And initially, I want you to think about, what if you had £1 million and what would you spend it on? Would that be a nice holiday cottage, a lovely car, travel around the world? And with that, when you're going out and looking at the website or the brochure associated with that lovely holiday cottage, what does it look like? Is it professional? Does it have high quality? Has that brochure got that lovely paperweight to it? And so when you're developing your investment pitch, make sure that it has that professionalism, that you've made the effort to make it look good, because an investor who has that spare £1 million, especially as an angel investor, they'll be wanting to make sure that instead of investing in that lovely holiday home, they're going to be investing in you. So make it look smart. So we're thinking like an investor, and we're not just thinking about the money. We're also looking for an investor that can bring something else to the table, whether that's that skills, the experience that they have. So when looking for an investor, think beyond the money. Equally, before you go out to raise investment, think about the amount of funding you're asking for and the number of shares that you're selling within your business. This should be realistic. It's about looking at companies within your space that have previously accessed investment at the same stage, and how they valued their company. And I always think it's worth writing down how many shares you're looking to sell from the outset, because in 6 months' time, when you're still looking to raise investment and the cash flow is becoming tighter, your negotiation position becomes weaker. And so I always think, what was actually the amount of shares you were willing to sell at the beginning, just so that you know what you'll be willing to share 6 months down the line. So before you start, research how much time you will have to pitch. So usually it's between 5 and 10 minutes. So the template that I'll be sharing with you is designed for about 7 minutes. So it kind of gives you that flexibility to shorten and lengthen where needs be. Keep it simple. This is just about dangling the carrot so that you can get through to a meeting with the investor and get through to that due diligence process. So you want to provide enough information to excite them to get through to that meeting. Make it look good, make sure you dedicate the time to make it look professional, and know your audience. So actually, who's going to be there that you're going to present to, what are their preferences. I think this is also a really good opportunity to talk to your peers who've previously received funding from those investors before, so you'll know how to tweak your pitch to the audience you're talking to. And of course, practice makes perfect. Often we will develop a PowerPoint, turn up and present it. Actually have you practice your presentation to make sure you can do it in the time frame that you've been given. So the investment pitch, we have a 12-slide investment pitch template that we use. This is what we'd recommend. They're the main areas that an investor would be looking for. Of course, this is your story, so it's about adapting this template to work for you. So I'll just go through these in a little bit more detail. So the title slide is usually up there before you even get on the stage. And so it's a really good opportunity to present what you do, whether through a slogan, that brand recognition, and perhaps if you've got pictures already of your product, to already have those up on the slide. What you can do to grab the attention of the audience. When you get up there, it's good to start with the elevator pitch to grab their attention. So who you are, what you do, and how much funding you are looking for. Next slide is about the value proposition. So what are the benefits you offer to the customers that you're targeting? And this is really identifying the customer need and the market opportunity and the solution that you're providing in order to deliver on that. And then how you are actually going to take that product, service, innovation that you have developed to the market, and the business model that you're proposing and the revenues you anticipate that you will generate from this. This slide is often missed from a lot of pitch decks, that they've presented this, the customer problem and need that they are working and solving, yet they've not actually said how they're going to generate revenue from that customer. And then traction and validation. This is really important. Investors want to know that there are customers that are willing to and wanting to buy this product now. And there are various forms of traction and validation that you can demonstrate. Ideally, you'd have some profitable sales, and that's a nice to have, and especially recurring profitable sales. But actually, if you've got any sales, that's great. Probably the next best thing is actually, do you have any collaborations and partnerships that you're developing, any letters of intent or memorandums of understanding? Actually, have you gone out there and done some form of market validation, even if you've only just got an idea and not even a prototype yet? What focus groups and what interviews have you carried out with your target customer group? And the market. So you've got this customer need, but what actually market opportunity does that present? And here we're not talking about the whole market, we're talking about the addressable market, and that's a bit of a bugbear for investors. And in the next few slides, I'll just explain a little bit about how you work out your addressable market opportunity. So to present the whole of the market, so in this instance, it's looking at fuel tanks within the automotive industry. If we were to represent the total market opportunity, that would be the automotive market. But actually, we're selling fuel tanks within the automotive market. So we were looking to find out what percentage of the automotive market is relevant to your business. So in this instance, the total automotive market size is 1.7 trillion, and that's been gathered by looking at market research reports, and it assumed that a percentage of that is associated with fuel systems and a percentage of that is associated with fuel tanks. And given the competitive landscape of the fuel tank market, we assume that we can gather a 15% market share, which gives us a £2.5 billion market. But another approach to achieve this is by doing a bottom-up approach. And that's actually say, how much could I sell my product for? How many customers could I sell to? This will give me my total addressable market size. And again, considering the competitive landscape of 15%, that gives me the number of 1 billion. Now, they're both very different figures, so 2.5 billion and 1 billion, but they've both been developed by using market data. And really, I like using both approaches to kind of build confidence in the total addressable market that you're looking to approach, and also to build the confidence of an investor that you know the market opportunity that you're trying to address. The next aspect, competition. So actually, how do you differentiate yourself between current players and incumbent players who are solving that customer need you've previously demonstrated? And this particular way of doing it, the Boston Matrix, uses a graph method to present the different competitors within the space. And ideally, you make sure that your company is in that top right corner, because psychologically, in the top right corner, that means it's the best. So you play with the axes to make sure that your eye drifts to the top right corner. And the main thing is to present the main competitive players within your space. You don't want to miss out any key players, because that either shows that you don't know your market well enough, which is a bit of a red flag for an investor, but also because if there is a key competitor not represented it also might mean that you are not being honest with the investors based on your competitive landscape. So do make sure that the main players are presented. There's also other ways of presenting it. You could, if you're in a very more complex landscape, then using a table could be the means of doing this for you. The main fault with this slide is that most people tend to write the features of their technology down that left-hand side, whereas actually you want to differentiate between your competitors based on the benefits and the main reasons why customers buy down that side. You know, is it cheaper? Does it provide better quality and value add, rather than the key features? And then another means, especially if you're in a complex competitive landscape where you're working with multiple stakeholders and partners, is to use this petal approach. So the people is probably the most important slide. It's about articulating who is going to deliver on your vision. And this is both your internal team, but also the team that you have within your external network, whether that's like a board of advisors, non-executive directors, those who are supporting you in this journey. And then finances, typically I'd expect to see a 3 to 5 year projection with the main headline figures. So at this instance, it's just those 3 to 4 lines. However, at a further due diligence stage, there would be expected to see far more detail behind this. This is a slide that's often missed within pitches, but actually is probably the second or third most important aspect of the investment pitch. And then another way of doing it instead of the table approach is to do that lovely hockey stick graph. You don't want to have it look like it's too ridiculous, but you want to provide an optimistic and realistic perspective of what you think is achievable in the next 3 to 5 years. And then the ask. So actually, why are you there in the first place? You're asking for funding, and what are you going to spend that funding on? And how's that going to transform your company so you can justify that higher valuation in the future? And then the exit. So an investor is wanting to get a return on their investment, and typically that's through three ways. That's through profit revenue distribution, which is not that typical. Some angel investors go down that route, and certainly within certain sectors like the film industry, but it's quite rare. Through the alternative investment market, so floating through initial public offering, or through a trade sale, and that's what's presented on this slide, and that's probably the most common method, and that is where the company will be sold to another company so that the investors can get a return on their investment. And it's understanding and presenting who you think are the most likely companies that would buy yours, and understanding their strategic motivations for doing so. And if you can find examples of other companies who've brought companies like yours before, but by providing market comparables and at what value then is demonstrated in company B, then that can be really powerful. And then the closing slide, and that's asking thanks and opening to the floor for questions if questions are allowed at the time. It's also an opportunity to leave some key statements on the slide, because again, just like the opening slide, this is probably one of the slides that's going to have the most airtime with the audience. Make sure you include your contact details, and that your contact details are large enough, because often they won't necessarily be able to follow up with you there and then at the event, but might do so at a later date. So you've prepared all that presentation, and then you actually have to go out there and deliver it. It's well worth making sure that you take the time to prepare in advance. So typically, if you're applying for public sector funding, there is usually a bias on the front end of what would be this pitch template, where you'd be focusing on that customer need and market opportunity and how you're going to address it. But what investors want to see is actually that focus on the back end of the presentation around actually what traction have you already got on the market, what are your finances, what are you going to do with the funding that you're asking for, and how they're going to get a return on their investment. And so it's really important that when you're preparing your pitch and practicing it, that you make sure that you weight the presentation across all the different aspects and make sure you have enough time to cover all of them. And as you move forward in through to the due diligence phase and you're providing your business plan and other information, actually they want to see everything. It's not just those things on the back end. So common mistakes we see is that a lot of entrepreneurs fail to prepare, that they'll have done it made a PowerPoint on their train journey down to the event, that they might use media and videos, but they don't necessarily always will work. And so it's making sure that organisers are aware of any media that you might be including. And actually, if it doesn't work on the event, do you have a backup plan? Something that I have messed up on in the past is actually the slide size. So here we're using formats, the software package that is being used when all the slide decks are merged together on the day, so that yours looks and as professional as you intended it to. Font, so sometimes you might have a particular fancy font that you use as part of your brand, yet do the organisers who are going to be uploading your deck have that font pack on their laptop? And if not, it's well worth considering things like PDFing your slides or JPEGing your slides so that you know that they look the way that you intended to. Make sure you check any deadlines, so when you actually have to submit a lot of pitch decks in advance, and also knowing what the timing and format of the day, and that ties into also about understanding your audience, who's going to be there, the number of people that are going to be there, so that you get the opportunity to tailor your message. that's it from the pitch template perspective. We do have a pitch guide, which we'd be very happy to share afterwards. But actually, once you've delivered that pitch, how do you deal with the Q&A? And I'll hand over to Emma to talk about that.
Right. Q&A is a really interesting session. Now, some pitches you'll go to, you will not have the opportunity to have a Q&A directly after your presentation. So that might take place when you're standing around chatting, networking, or could happen back at your stand. In a formal pitching environment, this is when sort of the investors might want to sort of get into a little bit more detail about something you've said, whether they've understood the challenge or the market properly, or they may sort of challenge you on a number of different areas that you've presented. And you need to be prepared for that. And you also need to be prepared to sort of take control of what's the dynamics of the Q&A session. So if you can have the next slide. Why do I say stay in control? It's really, really important because you're not always going to have all of those answers ready. And you also want to make sure that you've really understood what that investor is asking. So first thing you need to do is sort of engage them and where necessary paraphrase what they've said. So I've found that there are some investors who will make a very, very long statement, and then they'll ask you the question, and you're not quite sure whether the statement was fact or was formed part of the question. So you can paraphrase it and say, did I understand that correctly? After you've answered, you can say, is that what you wanted clarified? Or another one could be something like, did I answer your question? Be quite direct about it. And I was in a recent investment showcase where that actually came up, where one of the investors shared a lot of facts and knowledge, and it was really not clear, actually, even to me, what focus he wanted the question to be answered. So the opportunity to be able to actually address that question appropriately was really great for that company that was bothered to ask, did I answer your question? The other thing, if you're in a VC setting, it's quite important to know something about who's sitting in the room. Sometimes they can have people who've been brought in on a daily rate, quite a high daily rate as an expert, to make some comments. So one of the things that you can do is acknowledge them if they've said something that you may even contradict, or could be something that you don't necessarily think is relevant to what you're saying, but you can highlight that by saying, that's a really good point. And this is what I meant, and this is something that maybe we can discuss if it's not relevant, so can discuss a little bit later. Or the reason that I don't think this is relevant for my particular innovation or my particular marketplace is around this area, but come and talk to me later and we could discuss this further. And that way you're acknowledging the other person in the room and you're not being taken off track, but you're also acknowledging their expertise and the fact that they may have something to add to that conversation. And also, particularly if you're in a stand afterwards, you know, if you don't know the answer, you can say, I don't know, but I'll find out and let you know. Let's exchange contact details, and be aware that, you know, there are ways of deflecting in a very positive way. Don't be defensive. Particularly with the academic startups that I've worked with, where people have come from a background where, you know, certainly like being postdocing, where you've constantly had to defend what you're doing, whether it's in conferences, when you're defending your research in group meetings, and people can get a little bit defensive. Don't do that. Remember, some investors will actually try to push you to see how you handle the pressure, because they're thinking, if I'm going to work with this person, I'm going to invest in them, I'm going to be working with them for 3, 5, 10 years. How are they going to work with me? If I say something that I don't agree with the direction they're going in, or I think they should focus in a particular area, how are they going to respond to that suggestion? How are they going to sort of counter me? And I've seen that happen with investors who've really liked a particular opportunity. And they've also done that around areas like valuation of the company and try to understand that. So no need to be defensive. Just think about how you can deflect it and stay in control. Next slide. So what can you expect in the questions and answers? Well, it's likely to be tough questions, and there are never stupid questions. if somebody asks you something is stupid or you've thought you've already addressed, it might be that they haven't heard you in the way that you thought that you've communicated that information. So be prepared to educate and inform, and be prepared to repeat things, or maybe to say something in a different way. And it's quite useful then, to flick backwards and forwards on your slides, or have some backup slides, because this is a question or an issue that comes up quite frequently. And if you're in a crowded market space, or you're disrupting a particular approach, sometimes you do need to spend a little more time educating and informing. Very frequently, I see investors asking questions around the product USP. What's really unique and special about you? What's your unique selling point? And this is usually because there's been a failure in the value proposition, and there's been a failure in the competitor slide to really pull out those features and those benefits that you have in your product, which make you superior to your competitors, and mean that customers are more likely to buy your product compared to the other competitors. And remember, in some cases, doing nothing is the biggest form of resistance. And that can certainly happen in some of the products where it's a new marketplace and everyone's waiting to see if somebody else is going to follow. They're looking for the first adopter and the next person to follow through. So financial model and return on investment. And this is where I alluded to the fact that you needed to make sure that your research and development plan, your IP strategy, your development and resources and routes to market are all aligned with the income you're going to bring in and the amount of investment that you need in order to reach that break-even point and then that point of profit. So what you need to make sure is, if you have got a hockey stick sort of growth model, that you have actually demonstrated that you've started the sales process and you're going to be in somebody's tender, and that you can actually have that exponential growth. The next question you'll be asked quite often is, how are your customers going to buy your product, and how does that compare to the way in which they currently engage with the marketplace and the products? And that's really about understanding where you sit in the value chain, and what partners you might need to go through to get into that marketplace, and really understanding where you sit in that ecosystem. And quite often people underestimate how important it is to really articulate where you sit in the value chain in your particular marketplace. Your market and target. Now, what they quite often want to do, and this is particularly when you've given a rather nebulous large market size, is really get you down to say, okay, so which is your beachhead market? It doesn't have to be the biggest, it doesn't have to be the most lucrative, but what it has to be is the market that you can reach most easily and start making an income and show that people want to buy your products. Now, that market could be segmented in lots of different ways, but you need to be able to explain that. And I would say the beachhead market is a really important thing to consider when you are doing your market sizing. Next one is traction. Now, some of you will not have any customers, you wouldn't have made any sales, but you might have really good partners or collaborators. And so the traction has to be appropriate for the stage that you're at. The investors will understand that. And you also need to understand what proof points in traction the investors in the room that you're pitching to might be looking for, so that you can answer their questions in context of, well, we will have a collaboration. That collaboration will finish in 12 months' time. And then at that point, we've already built in some heads of terms for negotiation for the first sales. So that could be the traction that's coming down the line rather than what you've got in the here and now. And then you'll also get questions about the risk. Particularly if you're working in a very crowded marketplace and then you've maybe not articulated what's unique about you, or you've not articulated really where you sit in the value chain. And basically the investors here are wanting to understand, have you considered the risks? Have you budgeted for those risks? What are you doing, and how do you plan to work within your particular sector in order to mitigate those risks? And you have to think what those are and how appropriate they are to the sector that you're in. And each sector will have some very, very significant risks. Next. So we're kind of, the message from me, and I'm sure from Charlotte as well, is that you can never spend enough time preparing for the presentation and for the Q&As. If you don't know everything, so you're not the strongest on finance, try and bring somebody in with you who might be there to help with the questions and answers, or make sure you've got some supplementary slides, or you've gone through and you've got some guides and you've thought about those questions that you might be asked, so you're not sort of put out by it, and you absolutely can maximize the opportunity you've had when you've pitched to get an investor interested in you and to get them to move on to the next stage, which is to invite you to a formal investment pitch or to have a more detailed discussion with you. And at that point, I am going to hand over to you, and it's your time to ask us any questions.
So if anyone's got any questions, please do pop them in the Q&A box. One question for you both, though, is, are there any differences between a female pitching to a male pitching? Because I know when it comes to interview techniques, sometimes women do say we more than I, and it can count against them. So are there any tricks like that that women should look out for?
That's quite an interesting one. I can sort of talk about the investment events that I've been at, and what I've noticed that people have responded to has been more around the way in which the person's told the story and how that person's engaged, whether they're male or female. And I found that some females pitching are actually very good at getting that engagement with the room very quickly, of getting that kind of, what's the word for it? It's almost like the kind of connection with the investors in the room. So I think women have the advantage over men in that. But the people who I've seen who've been most practiced and most rehearsed, the words like we and I have not really come up as an issue. It's more been around the personal presence and confidence. The majority of investors that I've worked with may use language that sounds more male-centric, but actually are very even, whether it's male or female. And that includes the business angels that I've been with. In fact, I did call up one of the VC investors that I work with and said, you know, you use very much the word guy and he when you're describing things. And he said, I absolutely don't mean it. I've just got into such a bad habit with age that it's difficult to change. So I think there is more of an awareness in some of the panels, but I don't think from a male-female, if you've got a well-prepared pitch, you're enthusiastic and you deliver it well, that there's any real difference in the events that I've been at between the way males and females have been engaged by the investors. Charlotte, any observations in your sector events?
I totally agree with what you said, Emma. I generally find actually that female founders are better at communicating and, like you're saying, developing that story, in part because that's probably because they're more conscientious of preparing for the pitch. I would like to see more women apply to pitch at lots of different events, because, well, in part it raises your profile for your company. It allows you to be the company to watch, because investors aren't necessarily ready to invest at that stage, but will keep a track of your progress. And I think that there is now more openness about calling up investors when they are perhaps treating women founders differently, and that awareness building is more prevalent than ever. So it's a really good time for a female founder to be getting out there and showcasing their company.
One of the things I would add is women are more prone to that imposter syndrome when they walk into a room. And the way, I've discussed this with a recent pitching event with a couple of female founders, and the way I think you can sort of support yourself and prepare for that is think about the fact that when you're pitching for an investment, you're actually selling a story, you're telling a story. This is my vision, this is where we are now, this is how we got there, this is what our vision is, and this is what my story is. So rather than trying to to sell at the business, think about telling a story, because you own that story, you believe that story, you've made it happen to get to that point where you're in that room and they're listening to you. And if that helps you in changing the focus and how you feel about what you're doing, so it's less about selling and it's more about getting people on board to believe in you, believe in the product, then that can be a different way of presenting and pitching that you might feel more comfortable with.
Okay, so I've got a question which says, how would you suggest approaching pitching for an emerging market in technology where most audience members will not fully get their head around the technology without seeing it, and therefore would distrust the market forecast because it's a high technical offering?
Laura, so you can still present, well, one, you could bring a demo with you if that demo is functioning, and then it's great if you can then actually show people what you've got at the event, and there's always an opportunity to hand it around or invite people to come and see it afterwards. For an emerging market technology, it's about articulating still what that route to market is for that technology, where you fit within a value chain. So actually, even though you might not be selling to an end user who's going to be using the technology, how do you fit within other products or services that are going to be then selling to those end users, and articulating where you fit within that market landscape. It might mean that you have multiple markets you're approaching, but it's articulating how you're going to get there. So even a technical offering should have a commercial case.
I deal with a lot with emerging markets, and I actually don't think it's that difficult if you can really clearly articulate what the needs and issues are, and you can really articulate what the user journey is going to be like, and therefore how long it takes to get to that point. So if you've got an emerging market where you've got a very long time until it's actually going to be proven. So we're talking still, I say, industrial biotechnology and some of those areas, some of the agri-tech that we look at, where actually precision medicine, where it takes quite a long time for adoption. Most investors will understand that there's a long period of time, but what you can do is you can say, this is what the user journey, or this is what the investment journey is going to look like, and how it takes so long to get there. And then if you've really been able to do a very clear explanation of what the value proposition is and why this is an emerging market, and you've been able to explain where you sit in that competitor marketplace as an emerging market, why those other competitors really don't sort of address those opportunities, then you can tell a really, really nice story. And that's actually when really good storytelling comes into place, because you are very much then telling the story about what the future is going to look like. And sometimes actually explaining where things have come from and how quickly that market's emerging is really good. So there are ways of telling that story. And if you can use screenshots, you can have infographics, you can sort of explain what the customer or the end user journey and experience is going to look like within that marketplace, and then link that to how long it takes to build that market or that opportunity, and therefore why you need multiple investment rounds, then you can actually make a really nice story around that.
Thank you. Radhika, I'm hoping I pronounced that correctly, has asked, how do we look for suitable investor networks? Are there any websites that we need to keep an eye on? And they also stated they're an employee-owned company trying to interest the management to consider investment options.
So you want me to kickstart that one, Emma?
Yeah.
You can fill my gaps. To find suitable investor networks, so one, check out the UK Business Angel Association's membership directory, and also the British Venture Capital Association membership directory, just as if you were going to be looking at different websites to keep an eye on. Equally, look at investor showcase conference listings and sponsorships. And also look at companies in your space that have received investment and where that has been. Crunchbase is a freemium model online website, and that sometimes provides data, and we use a subscription-based service called Bowhurst to find out their data of where companies previously received funding. Equally, like I was saying about going out there and raising your profile, whether that's at an investor event or actually at like your local things like VentureFest events, is a good way of raising your profile to the investor network. And often there are investors that will attend those events or see the companies that are at least presenting. Also going through friendly networks like the Knowledge Transfer Network and Enterprise Europe Network, who can help you understand the different investors within your space, and if they've got connections, either make warm introductions or know somebody who can. Emma, are there other ones you might suggest?
Well, the first thing I'd say is that if you've got companies that are similar to you that are sort of privately owned, you can go actually onto Companies House as well and look at their cap table and see who's invested in them. So you'll have an idea if they've gone to particular angel consortia or individual local holdings and local investors. And where that can also be very useful is if you work with your local enterprise partnership and the growth hubs. So the growth hubs are regional, and they bring in together all the funding which is regional through the different local enterprise partnerships. And quite often they have sort of funding which is regional focused and to support the businesses, but they'll also have family trusts and local family officers that are very keen in investing and supporting in those sectors. There are also some very, very good thematic investment showcase events where investors will come along to those. And you might find those in the science parks where you're at. You might find them in some of the university incubators as well. So actually working those networks locally, asking people like the local enterprise partnership and the Enterprise Europe networks, where the good networking events are that you can go to. There are also sort of like female founder events and things like that. Quite interesting, a lot of the female founders I work with don't want to necessarily be in a female only focused event, but actually find that they can be useful. So, it depends what your preference is. I would say that it's depending, particularly as you're a company, an employee owned company, that you might find, and depending what your objectives are, that you might find that you'll fall under the social enterprise and that kind of funding. Or if you've got directors, you might also want to look at directors' loans, personal loans that you can put into the company for growth, because that will give you, without having to sell a share of your company, you can have more control and growth. And you might find there are things like convertible loans that you'll get from sort of alternative financing around those packages from some of the other organizations. So have a look at the British Business Bank. They have fantastic resources, and they might give you some other ways of thinking about where you can get funding outside of investment.
And Cynthia has asked, how do you deal with the fear of the investors about the hardware component? So she says she always feels the preference of the investors for software tech companies over IoT and hardware.
So I think a bit like referring back to that previous question, it's about understanding the suitable investors for you. So I agree that a lot of investors are looking for how a company is going to get to market, generate that economies of scale and meet those global opportunities. And that can be a little bit more challenging around the hardware aspect. However, there are investors who do invest in hardware, either solely or as part of their portfolio. Also looking at perhaps some accelerator and incubator programs who do specialize in things like hardware, like the Central Research Laboratory, to see the sort of investors that are engaging with their programs. And also coming back to actually making sure that you build that business case and present that road mapping and funding journey that you're going to require in order to build that scale.
I don't personally think that hardware is fearful to investors so much as that you've actually understood what the cost implication and what the risk is to the business and how you've articulated that. So that's back down to, have you got the right channels, the right partners around hardware? Have you got enough funding in order to be able to do the deployment? Can you support that hardware? Is it 24/7 support requirement? Is it a lend-lease model? It's more around what the business looks around that component and how you've articulated that is quite often picked up. And again, as Charlotte said, just to reflect what she said, if the investor doesn't have that risk appetite and doesn't have that understanding, then they're unlikely to be the right investor for you anyway.
So that is all the questions that I've got. Is there any other tips, advice that you haven't already covered that you'd like to mention?
Be bold, get out there, start practicing presenting your pitch. The more that you do, the more feedback you'll get, the better you'll refine your messaging. Present with each other, find friendly peer-to-peer networks that you can support one another in this. Ourselves, me and Emma listen to a lot of pitches to provide feedback, but there's, like Emma said, there's lots of people from growth hubs and local enterprise Europe network that can also support in just providing that feedback. And the more you do it and the more feedback you'll get, the more confident and more refined and powerful your messaging will become.
And practice your storytelling. I think people underestimate to what extent in an early stage technology, what you're selling is actually a vision, and you need to have a really good story that you're telling. And if you get a really good story and you really engage the investors, they're going to be far more engaged with you and they want to know a lot more about you. And also they're more likely to want to help you and support you, give you that additional information. And also the other thing I would say is ask the investors questions like, so to invest in me, what proof points would you be looking for? Where do you see the risks in the business? What milestones do I need to reach? Are there any particular routes to market that you think we should consider? Are there any particular customers that we haven't identified that you think we should identify? Most investors I've met are very, very willing to help and support outside of the investment pitching event. They have a lot of knowledge and are willing to share it and want you to succeed. They do want you to do well. They may not be able to or want to invest in you. They may not think that that opportunity is the best one, but what if you pivot your business in 12 months' time? They will remember you. They'll have a good dynamic if you've taken their advice and you've acted on it. Tell them, thanks for that advice. We did what you told us. Would you like to catch up and hear about where we are now? Just build up that rapport, that relationship.
Okay, thank you very much both for presenting that. Some last words from me. So thank you all for joining the Women in Innovation Building Success webinar. We have another branding webinar being held on the 30th of October, and then an intro to innovation funding and finance webinar on the 6th of November. If you want to join our community, there's the newsletter that you can sign up to via KTN's website. There's also an online community on our World Labs platform, so the address is featured there. Or if you want to get in touch personally, my email is just at the bottom. Please feel free to contact or join the communities, and we hope to see you at one of our future Building Success webinars. Thank you again.